Today, I'm going to share with you 3 tips so that you can make money in the next stock market crash and so that you can maximize your returns. Tip number 1 is to trim if you need cash. Right now, there are a lot of stocks which are really overvalued right now, like the big tech stocks. And right now, it's a perfect time to sell part of those positions. If you need to raise cash and if you don't have a lot of cash right now, you're going to want to get a lot of cash so that you can start buying a lot of stocks once the markets do come down to more attractive levels. A really good way to do that is by selling parts of your positions which are really overvalued. And you can see that Warren Buffett actually does this a lot. For example, most of the time when he sells stocks, it's not a total sell of the entire position. Usually he sells stocks by just trimming a little bit of every position that's overvalued so that he can claim some gains. Because keep in mind that you don't officially claim any gains until you actually sell your stock. And my second tip is to not sell entire stock positions because that's just a really bad idea. If you're a long-term investor, you don't want to sell out of your stocks when you're all the way up here just because you think that they're going to come down here. And although a lot of your stocks will go down in the short term, most of them will rebound to their previous highs and in fact even overshoot them and go even higher. So you're missing out on long-term potential if you sell out right now. And if you think about it for a second, the idea of selling a business because it's trading at a really high price is actually very weird in real life, right? If you own a business or a restaurant and let's say it's worth $1 million, you think it's worth about $1 million, someone offers you maybe $1.2 million to buy the business off of you. In real life, you're not going to sell that business. You're going to still hold it for probably the rest of your life or for many, many years because that's how you buy businesses in real life. Because you would want to get the long-term returns from owning the business, not from just immediately selling it. And the same principle should apply to the stock market because when you're investing in the stock market, you're also buying businesses. So you don't want to sell a business just because it's slightly overvalued right now. Instead, you want to sell businesses and stocks when you're no longer willing to own them because that's when you would sell a business in real life. And my third tip is to sell certain types of stocks. Yes, I know I just said you shouldn't sell entire positions, but there are some stocks which definitely warranted being sold. Because life isn't a broad paintbrush. Every piece of advice doesn't apply to every single stock. And there are just certain stocks that deserve to be sold. For example, if you bought a business maybe a few months ago and you said, you know what? At the time, I really liked the business, but now I don't. Maybe I was wrong about how well they were going to perform. Or if you bought something like airline stocks or cruise line stocks when they were down a few months ago, but now you're kind of worried because they have to take out a lot of debt, it's probably a really good time to sell those stocks just because you don't want to hold those stocks for the long term. And according to my investing philosophy, I just never want to buy businesses which are really high risk or really bad in general. That's just not for me. And if you agree with that, you want to make sure that you're only owning safe businesses before the market actually goes down. Because if you're owning a really high risk business that's very speculative, it's going to be very volatile when there's pullback in the market. And you definitely don't want to own high risk businesses in your portfolio. And to make sure that your businesses are actually safe, you can look at stuff like their debt, how much you think they're going to make this year, what is the stability of their actual industry, and you can also look at their dividend. In my opinion, a dividend is a sign that a business is safe, but I also think that a business not paying a dividend is not necessarily not safe. You can have safe businesses which don't pay dividends in my opinion, but you really just need to focus on buying good businesses at good prices and you'll be a-okay in the stock market.